Hello there, my friends. Chris Marcus here with you for Arcadia Economics on a really exciting day in the silver and gold markets. Now, I know some people think that I always say that, and you might suggest, well, with the price of silver just up a scant 16 cents today, what could be so exciting about that? But fortunately, that's why I have my friend Greg Johnson of Metallic Minerals joining me on the show to dig in beneath the surface, like someone who actually knows how to find silver, unlike myself or certainly anyone from Goldman Sachs or JP Morgan. So Greg, it's a pleasure to have you here with us today. How are you doing, sir?
Hey, I'm doing great. It's nice to be here for the first time. Thanks for the invite.
Well, it's a pleasure. I've heard good things about what you guys are out there doing. So we will dig into silver supply and maybe we can touch on the company before we wrap up, let folks know what they're getting there. Although, Greg, as I know I don't have to explain to you, it's a fast-moving market these days. A lot of interesting developments happening. And I was thinking, since you're here, maybe you could see some of the exciting news that's happening, give your expert take. Feel free to say, I don't know. I know bankers don't like to do that, but how does that sound?
That sounds great. Yeah, let's dive in.
All right. Well, right off the bat, I find it's interesting to listen to bankers and so forth. And here's Jim Rickards. He'll mention here that he's a former Citigroup banker. Talks about the manipulation in the price, which I know has been debated widely. But let's start with this one and see how that goes. Sound good?
Yeah, it sounds good.
And if he says there's manipulation in the market, of course there is. In my book, 2016, The New Case for Gold, which is also a national bestseller, I actually give a handbook on how to manipulate the market, saying I know how to do it, and I explain how it's done. So it does go on. There are backstories. There are some really major fundamental things going on. I'm not saying that's not happening, but I wouldn't put too much weight on one like little accounting error.
All right, Greg. Well, not only does he acknowledge that manipulation happens, he said he's from Citigroup. He actually did a simulation with the Pentagon on how currencies could be used as a financial weapon back in 2009, was in his first book. So with that, he, as he mentioned here, he even wrote a handbook on how banks could manipulate markets. So as someone is running a company that goes and gets silver out of the ground, we got a few more clips, but anything on that first one right off the bat there?
Well, there's no question. We know that the bigger players take advantage of the market, right? Because they can. And their sheer weight as they come into a position, out of position, has outsized impact on that. We see that in our individual companies, for instance, when a big institutional investor wades in, it has a huge impact. And of course, if they decide to exit at some point, it can severely depress the prices. So I have no question that there are players that have vested interests in where the metals are going. You hear about these giant short positions with some of the banks like JP Morgan and others. And you hear about the stuff like on the London, bullion exchange, and do they really have the metal? I think it was a recent article with Sprott that I thought did a great job of painting this transition where more and more of those commodity contracts are taking delivery of silver, and what will happen at some point when they open the doors and there's no silver to deliver. So it adds to I think an exciting backdrop, because the fundamentals for silver are incredibly strong right now. And then you add these uncertainties about these big players and what they're doing with these, I don't know what you want to call them, derivatives and short positions and all these exotic things that they're doing, on top of an already over-allocated market in terms of the supply for silver not meeting demand. And that's why we're seeing rising prices. And so I think it's a pretty exciting time right now to be looking at the space. And I think these kind of uncertainties with the big players could create fireworks that everyone will be surprised about it when it happens. So, it's a great time to be looking at the silver space in that regard.
Yeah, well, Greg, that was the conclusion I had. But, sometimes the windows in my flying saucer get dirty in today's climate change environment. But fortunately enough, Jim, actually, everything you just mentioned there on Whether there actually is enough silver to deliver, I think that's a reasonable question. I've been called a conspiracy theory for asking such silly things. Yet, actually, that question you just saw was in response to whether it's worth taking notice that the LBMA had about 116 million ounce error miscount, which is very close to the 118 million ounces allegedly added in the beginning of February that neither I nor any analyst I know alive on the planet, aside from perhaps Jeff Christian, believes the metal could be added. So I think that's significant. But in the end, maybe we're just talking semantics. And like you said, is there enough metal to deliver? Let's find out. And here we go.
People look at these inventories and they compare them to open interest and futures contracts or other contracts and they go, oh, there's not enough precious metals to deliver on all these contracts. Well, first of all, that's always true. The paper open interest, if you count, oh, there's not enough precious metals to deliver on all these contracts. Well, first of all, that's always true.
Did you catch that, Greg, that when people say there might not be enough to fulfill all of the contracts, didn't seem like there was hesitation. He just said,
to deliver on all these contracts. Well, first of all, that's always true.
Comments there, Greg.
There you go.
Greg, does that make you want to own mining shares more or less after you've heard that statement, given your biased opinion where you could be talking your own book?
Yeah, no, absolutely. I mean, I think it underpins the fundamentals that are already there. And for a surprise event that one of these groups gets themselves offside, they've shorted when they shouldn't have, or what have you, that adds that kind of call option event value that could come in because people have made the wrong choices, and then they can't unwind that without having a dramatic impact in the market.
That's what I had too, but we will continue on.
The paper open interest, if you count futures and over-the-counter derivatives and other contracts, option contracts, et cetera, is always a high multiple of the physical inventory. And that's because it's not supposed to settle. And Blythe Masters said that years ago. I had the quote.
Let's stop before we get into Blythe Masters, who was the head chief of JP Morgan during the time period where they got caught rigging gold and silver prices hundreds of thousands of times. But he mentions it's not supposed to settle. And I've been reading some books, me and my silly history hobbies and all that stuff, about what the Comex did and how they screwed their customers back in 1980. And I tell you, Greg, whatever you thought happened, when you actually hear the details, and now we hear that not much has changed on the Comex because, as he's about to describe here, that appears to still be the game plan.
And Blythe Masters said that years ago. I had the quote. I preserved it, but then I could never find it again. I saved it, but she was giving an interview, and I sometimes people who are highly knowledgeable, they don't want to say everything they know, but they let slip. And she said, gold never settles. And she was right, because if it ever did settle physical paper, it wouldn't work. But if you read these contracts, there are always termination clauses, force majeure clauses. Read the rule book of the Comex. It says in the rule book, we are not a source of supply.
Greg, it says it in the rule book. Any thoughts on that? They're not a source of supply. This is who's setting the price, the Comex. And here's someone, Citibank, CIA, Pentagon experience. He knows he has access to more than I do. I wouldn't question the knowledge. And he is confirming that the laws can be changed when it gets exposed that they don't have enough metal. Anyone can buy a book about the Hunt brothers saga in 1980, which is not quite them cornering the market. So what do you say to that, Greg?
Well, I think it reinforces, Eric Sprott and others saying to take delivery of your contract. Like if these funds, if individuals actually take physical delivery, at some point, the system, you got to think, kind of blows apart, right? And that just reinforces why probably owning other forms, physical metal, mining shares, as opposed to just contracts, is probably a good balance to have.
Well, as the old saying goes, the one time Blythe Masters might be telling the truth is when she's explaining how to rig the silver market. So let's see Jim finish this one up.
The rule book, we are not a source of supply. It says that. They also
Again, that rule book, the Comex rule book, apparently they don't tell the public that they're not a source of supply, but that's why if you hit the subscribe button and notification bell, you can find out here.
The rules saying they can change the rules. So, and it says that we can change the rules. They have a board meeting, have an emergency what are called disorderly markets, and they can change the rules. So they're prepared for this. They know it. Market professionals know it. So I never read too much into these inventory counts, and because of course they're low, and they can always get more gold and silver if they need it.
So you don't really have to pay attention to the inventory counts because in a paper supply world, they're never really important, and you can always get more gold if you need it. Greg, what would you say to that?
Well, there you go. I mean, again, I think it reinforces, if that's really the case, then, investors buying physical metal mining shares, ETFs like the Sprott ETF, and I'm not trying to pump Sprott's products, but at least it's physical. And if you decide you want to get your bar, they have a form that you fill out and they FedEx your bar to you. So, otherwise, if you're tied to something like, one of the things I've got the big questions about is like the GLD and the SLV, you try to read what those are all about when you read the details on the investment material, and it's very opaque. Do they actually have the metal, or do they not have the metal? Do they have paper contracts for metal?
Hey, did you know SLV, if you call iShares, they can't even find the audit? True story. I tried a couple times.
Well, there you go. But these are important in our market today. A lot of people use SLV and GLD as benchmarks, right? So it's not like they're not in there and they're not important in terms of the overall kind of spectrum. But I think at some point, hopefully, we're going to see the physical demand and the paper pricing start to come more in line, because clearly they're out of whack right now. And I think the geologic abundance of silver to gold, it's about 18 to 1, and here we still are at 60 to 1 on the gold silver ratio. So it's hard to justify why silver is still trading as low as it is relative to gold. My guess, and I'm not an expert, but my guess is gold is probably more likely the more manipulated of the metals because it's held by the central banks. Silver is probably a more difficult metal, but it tends to trade in sympathy with gold. Historically, we usually see gold lead and silver follows and leverages that move in gold. I think that's why a lot of investors are focused on silver, is they feel it's at least it's a little bit more of a true tracking instrument, not as affected by the central bank activities.
Well, based on that, Greg, with gold crossing $1,900 for a single ounce again, well, silver is not only half of its 2011 high, but half of its 1980 high as well. That would make it seem like silver's got perhaps a little catching up to do. Hey?
I think so. I think silver is dramatically undervalued historically. Even if you take a really long-term average, it's more like 50 to 1. Maybe that's a more reasonable, trading.
Numbers don't add up, do they?
Range. They don't. But we recently were as high as 120 ounces of silver to an ounce of gold. So it has hit an extreme. Oftentimes, those extremes in the gold-silver ratio mark major lows for the precious metal cycle. And that extreme point may have been the last kind of takeoff point for silver to move into its next bull market. And the one thing is, gold has hit its nominal highs recently, right back to 2000, but that's not an inflation-adjusted high. So it's still well below a kind of a real high in terms of real terms when you adjust for inflation. And I think we will see silver at some point, maybe not in the too distant future, take out its previous highs, just as gold has on a nominal basis. And then eventually, hopefully, if the market is functioning fairly normally, it's going to adjust and find its true pricing. And I think it's potentially much, much higher than is currently being factored in by the marketplace.
Well, Greg, prior to this morning, I obviously would have said that's complete conspiracy theory nonsense, yet I will admit my errors in my ways because I was corrected. It reminds me of something. Again, if we go back to the tail end of the last one, where you hear
mining, mills, refining, dealing, etc. And I can tell you, gold is in short supply. They can't get it.
So he says, I'm going to take it back.
The industry from mining, mills, refining, dealing. So kind of out there, hands-on with the industry from mining, mills, refining.
Oh, whoops! I had the wrong clip on. Excuse me. Because you remember at the end of the previous one, He talks about, which would be this one, I believe. He was saying gold is getting harder to find, right?
Yeah.
Or no, that, let's see, all right, we'll try this again. We will pull up, I have to take my word. Hopefully you remember when he said that. Okay, is that the end of this one, I believe.
So, are working orders, et cetera. And some kind of out there hands-on with the industry from mining.
Oops, I understand my error. Greg, while I find that, why don't you tell me what you've been seeing about the supply of gold and whether it's getting easier or harder to find, because you're one of the people who's out there looking.
Yeah, I think one of the big things from an industry point of view is if you look at whether it's silver, gold, copper, the reserve grades for the major mining companies have been falling dramatically over the last decade, 2 decades. And in fact, they've cut in half for most metals. So that means when you look at a mine, it is a fixed throughput of the mine. So they mine a certain tons of ore through their mill, and they can't really adjust that without a major capital expansion. And so as reserve grades go down, that means the amount of metal, they still put the same amount of tonnage through the mill, but the amount of metal that's actually processed is actually falling. And when you combine that with the much fewer discoveries, major discoveries over the last decade compared to past decades, both of those elements, the falling reserve grade, which means less metal produced, and the falling discovery rate are both very bullish for a constrained supply side. And eventually, one would hope that supply and demand start to balance out so that constrained supply results in significantly higher price discovery for the metal.
Have an emergency, what they call disorderly markets, and they can change the rules. So they're prepared for this. They know it. Market professionals know it. So I never read too much into these inventory counts, and because of course they're low, and they can always get more gold and silver if they need it.
Chris, you're muted. I heard the video, but I can't hear you.
Whoops, sorry about that. So he's saying that they can always get more gold and silver if they need it, which technically is true for the reasons that you just suggested. I would assert that it's going to take a much higher price. While he said they can always get the gold and silver, here he mentions it's getting increasingly harder to find. So let me play this one for you.
Look at just the fundamental facts. Global mining output is flat. It's not zero. I'm not talking about peak gold. Actually, maybe gold is getting harder and harder to find. But, I always, I'm somewhat critical of a lot of analysts, particularly people in Washington, but New York, but elsewhere. They don't get away from their desks. I mean, they just sit at their desks. I'm at my desk now, but that's okay. But they just stare at the screens all day, and they know what everybody else knows. Well, I travel around the world. I visited the biggest refiner in Switzerland, on site. The second biggest refiner in Australia, on site. I've been 1,000 feet down in a gold mine not long ago out in Utah, on site. The helmet and headlamp and the whole thing. I talk to dealers all the time, like real physical dealers who are working orders, et cetera. And some kind of out there hands-on with the industry from mining, mills, refining, dealing, et cetera. And I can tell you gold is in short supply. They can't get it.
So while he said that there's always more gold and they can get more, he also said gold's in short supply and they can't get it. Greg, do those seem to be conflicting statements, or what do you make of that, and what can we take away here from including what you've been experiencing?
Yeah, so I think it supports the concept that the industry has not been finding major new ore bodies and bringing them to production, at least not at the rate that they were in past decades. So it is getting harder to find. The deposits we're finding today are deeper. Many of them are covered. You have to go into higher risk political jurisdictions. So, and the low-hanging fruit, the initial opening up of some of these jurisdictions, those have been pretty picked over, places like South America and other jurisdictions. So now it is getting much harder for the industry to find metal. So I think that supports his comment. the point that they can always get the gold and silver, I guess he's referring to if you move the price high enough, there's always someone who has bars in a vault that will ultimately say, okay, that's a price I'm willing to sell at. But I don't think it means that the mining industry could suddenly push a button and find more. That's just not true. In fact, it takes typically a decade or more to bring a project from discovery to production. So even if you found one, there's at least a 10-year lag. So it's not something that they can just find more geologically or naturally, or the mining industry can. He must be referring to move the prices dramatically higher. There'll be a vault somewhere in the world that will open up and sell you metal. So, I think it's not implying that it's easy to get and it's totally non-disruptive to pricing.
Yeah, well, that makes a lot of sense to me. And although I think I've been able to figure out where all of the confusion actually stems from, Greg. I mean, especially in today's topsy-turvy Wall Street worlds where there's a bank that says this, there's two halves to every trade, right? So someone could be right, someone not. And it's interesting. Are you familiar with a commodities analyst named Jeff Curry of Goldman Sachs?
I don't know him personally. I've certainly seen the name, on the commodities side. I think, he's certainly Goldman Sachs is one of the biggest players in commodities.
I mean, I could not agree more. In fact, it was funny when I was down at Wharton's Mickey Mouse MBA program, when all the banks would come down, Goldman would have the biggest crowd. It was like they were rock stars. And here's this guy. I'm glad you're aware of him. You may want to get on his research list. It's truly fantastic stuff. A guy named Jeff Curry, whose appearance changes a lot over the years. Maybe the stress of committing felonies on behalf of Goldman Sachs. You never know. But fortunately, Jim actually, now I want everybody to see this. So you see that, and you can go to Google, Goldman Sachs, head of commodity research. I didn't type in his name, just Jeff Curry popped up. Fair enough?
Yeah.
No rigged deck. We're not like doing banker tricks here or anything with you, Greg. I would never do anything that silly. So let me pull up the last clip from Jim here. This one is truly special and educational. I'm honored as we've been getting to know each other to share this one with you. So let's see what Jim thinks about JP Morgan and Goldman Sachs.
Are we seeing the smart money present yet in gold? JP Morgan putting out a report this week. We saw the pullback in Bitcoin, and the report signaling that there's, their investors are taking money out of crypto now and placing it into gold. A reversal of the narrative.
Reversal.
Yeah,
Reversal
it
of
is
the
a
narrative.
reversal of the narrative. I don't necessarily think of JP Morgan Research as the smart money. I'm not disparaging them at all. They're smart people who work there. I was once taken aside by it was tapped and asked to give a private consultation to the head of global commodities trading for Goldman Sachs. It was at some meeting in Hong Kong. We sat and had a great conversation for about an hour and a half. And he wanted to kind of pick my brain on China a little bit. So at the end of it, I said, I got a question for you.
Now, Greg, so far are we in agreement? He talked about head of commodities of Goldman Sachs. This has to be Jeff, right?
Yeah.
I mean, the title's not... Let's see what Jeff told him. This is new. There were times during, I'm about to turn 43 in September. And there were times during life, as I know anyone who's digging for gold and silver knows, that if you face adversity, and some days are a little easier to handle than others. But when I found this, it was one of those moments where it all made sense, why it was worth it to go through everything, and honored to share this with you and my audience all at the same time, Greg. So let's finish this baby off.
To kind of pick my brain on China a little bit. So at the end of it, I said, I got a question for you. Your research department just came out with a report that said gold was going to $1,000 an ounce. And he looked at me and goes, well, no one listens to them. And this was the head of, it was Goldman's research department. The head of trading for Goldman said, we don't listen to.
Oh, sorry, I laughed too loudly over that, what Jeff Curry said about Goldman Sachs' research. Let's hear it again.
It was Goldman's research department. The head of trading for Goldman said, we don't listen to our own research department. I said, okay, that explains it. Trading for Goldman said, we don't listen to our own research department. I said, okay, that explains it. The head of trading for Goldman said, we don't listen to our own research department. I said, okay, that explains it. But so I don't necessarily put a lot of weight on that, but.
He doesn't put a lot of weight on it. I can't figure out why. Greg, That's why I call in the big guns. Look, I understand I'm a kid. I'm new to the game. I'm not even in Jeff Christian's league to get on his show. That's why I'm calling someone with more experience. I've got some gray hairs on the side that I cover up from time to time. But Greg, as the industry veteran, what do you say to such? What do you say to that? I don't even know I'm speechless. It happened.
Yeah, I don't know. I mean, it implies that they have two different, there's a voice or recommendations that are internal, and there's a recommendation that go external to the marketplace. I believe that's called talking your book. So.
Could write a book about it. We make a good team, Greg. Yes, I think that's the definition of talking one's book. Although I've heard in their ghoulish elite code, there's actually this bizarre rule that in their own weird sense of karma, they have to reveal what they're doing. And you never know where it's going to pop out. But that's why I love watching banker interviews. Sometimes they lay it out clear as day. And I might add that while Jim was not concerned about the 116 million ounce miscount, which is almost identical to the 118 million ounces allegedly added in January and February during that silver squeeze couple of days that nobody thought could have been added. He didn't think that was significant, but Greg, what could someone who's new to gold and silver and is thinking, what the heck is going on here? In a sentence, what is the takeaway from all of this? What could you share there?
I mean, I come at this from an industry exploration, finding discoveries, growing value point of view. And I think if you really step back, you say, okay, if I'm interested in this sector, there's some fundamentals I need to be aware of. First, there are these long cycles. They are decade-long cycles. The last one went from 1999, 2001 was the low, and it peaked in 2011, 2012. And we went through a bear market from 2012 to it bottomed in 2016 to 2020. Maybe you could even argue this was a third test of the low in early 2021. So it's basically, we've gone through a major decade-long cycle. We've gone through the bear market part. We've gone through the trough, and now we're at the beginnings of a major bull market in commodities. And typically these last 6 to 10 years. So the wave, the long wave, where you want to be riding is upward, I believe, from here. One could argue that this commodity cycle could be bigger than the last one. What was the last one built on? It was built on industrialization from China. It was built on printing money after the 2008 crash. Where are we today? Well, the entire world is trying to stimulate, not just China. And they've been printing money like makes 2008 look like nothing. And so you could argue that this cycle has all the makings of something that could be outsized relative to the last cycle. But despite that, I think it gives a backdrop to say the fundamentals are in place for higher prices of metals, particularly silver and gold. So there's going to be noise, there's going to be events, there's going to be people who are trying to hold the price down. But typically when you hold the price down long enough, when it finally breaks, it really can explode. And so I think knowing that you're in the right part of the cycle is number one. Knowing that you've got instruments like investments in mining companies, physical metal that are safe. These are things that are tied to the tangible is a great place to ride this. And then kind of maybe not getting too pulled into, what is Goldman Sachs or JP Morgan or these other groups saying? Because honestly,
even Jeff Curry doesn't
get
too pulled into it. So I second that. Please, yes.
So I think it is a great time for investors to be looking at the sector. I think there's great opportunities. We've recently seen a peak back September, August of last year. The metals themselves have broken above that downtrend line. So it's been a solid consolidation, which is healthy in the bull market. We've seen the large cap companies starting to move. They've broken that downtrend line. We're seeing the mid caps a little behind that. And we're seeing the juniors, what I believe possibly getting poised for a major move here and a breakout. And I think this could be a run similar to what we saw in that period from March until August of last year. And it's a great time for people to be looking at the metals. I think there's still good value here. particularly silver relative to gold. And I think it's an exciting time to be a spectator of the broader kind of machinations of what's happening in this space.
Yeah, well, especially as we are in the vicious grips of a hyperinflation campaign. Let us do a quick look over to CNBC to see what money printing headlines we have going today. There you go. Senate unveils its new $928 billion infrastructure counter offer to Biden. Good to see the deficit reduction is right on schedule, as always. So that's good news. Greg, before we wrap up, since the world is going to be counting on you, since apparently Goldman Sachs research isn't safe, to solve the shortage crisis that Jim Rickards described of gold and silver, could you let folks know a little bit about what they're looking at with metallic minerals, and how they can get more information? So if they have questions about your projects, they can follow up and get the kind of transparency that is advocated by Ross Benham, Dick Berner, the MRAC, and CCP Market Policy.
Yeah, you bet. So Metallic Minerals is a silver-focused explorer developer. We're in one of the highest grade silver districts in the world, in the Keno Hill Silver District, next door to Alexco Resources, who's just gone back into production. We are focused on new discoveries. We had our largest drill campaign in the company's history in 2020. We made several major new discoveries, large-scale systems out on the eastern part of the district, and some very high grade, up to 2,500 gram per ton hits in drilling on the western part of the district. So Metallic Minerals is an exciting leverage to silver play in a stable jurisdiction next to some of the world's highest grade operating silver mines. In addition, we've got some earlier stage projects, one in the southwestern US, which is formerly explored by Rio Tinto and Freeport. And we've got a portfolio of alluvial production royalties that is starting to mature and could result in near-term production and cash flow for Metallic Minerals starting here in the next year or two as that comes online.
Now, Greg, I see in the media section, it doesn't look like you're receiving coverage from Goldman Sachs. Can you confirm or deny that for the audience, please?
I can confirm that we're not being covered by Goldman Sachs.
Well,
one of the challenges in our sector as explorer developers is these names don't get a lot of coverage. The good thing for investors doing their own homework is if you can understand the quality, look at things like where the asset's located, the history, how they made discoveries and are they producing mines, the track record of the team, all of these elements, if you can do your own homework and due diligence on these names, and there's not a whole bunch of analysts that are covering a name yet because it's early days, that's your opportunity where the market really isn't pricing these things for their true value and potential yet. And I think that's one of the reasons we see a lot of groups focus their investment in the precious metals in the junior space in companies like Metallic Minerals.
Yeah, well, I think that could be a great bullet for your website, right by the stock info. Note to investors, we are not covered by Goldman Sachs, where their head commodities chief of research doesn't listen to the shit his analysts tell people so they can steal from them and then ignore it. Actually, I believe they're being questioned by the House Representative Financial Services Committee right now at this very moment. And I did write Representative Maxine Waters a letter explaining exactly how they manipulate the market. So I'm sure she's going to be grilling them on that in any time. Greg, a note about the share structure, which people always like to see. Can you comment there, please?
Yeah, you bet. Yeah, so 126 million shares outstanding. We've got about $6.5 million in cash in the bank. So the company is well funded for an expanded exploration program at Keno and at La Plata this year. And we've got about $12 million in the money warrants that are starting to come in. So we're in a great financial position, no debt. The company here is led by a group that has a track record of exploration discoveries. I'm one of the original co-founders at Nova Gold. Many of the people around me and then the team are former Nova Gold folks. So these are people that have made discoveries, major discoveries, so have a real nose for that type of value creation. And we're excited to be working on what we believe is one of the premier silver camps in the world. On these exciting projects that are at that discovery and resource development stage.
So this isn't being run by some of those banker types Jim talked about. Never forget, they're just staring at a screen all day and couldn't tell the difference between a deposit and a football.
Unfortunately, just a bunch of exploration geologists and mining engineers who happen to know their business. That's all.
Got to send those nerds out somewhere, right? You know, you don't want to listen to them all day. Give them their rocks to play with.
That's right.
Go ahead, Greg.
Oh, I was just going to say, if you're looking at a junior mining company and it's run by former bankers or lawyers, you probably know you're not looking at the right company.
Well, I'll tell you what, it would be truly fantastic to see what Jeff Curry's with his gold and silver stock picks would be. We won't name any names, but Greg, just one last time, can you let folks know if they have questions? There's handsome Chris Ackerman, senior manager. No wonder guys running the show. What's the best way to get questions answered there, sir?
Yeah, so you can, here on the contact us, you can come in through the website. There's a toll-free number. We always enjoy speaking with shareholders, happy to provide information, whether it be on the silver market or specifics on metallic minerals specifically. We're part of a group of companies called the Metallic Group. We have a sister company, Group 10 Metals, that is in the battery and platinum group element, so precious metals on the platinum side. And then we have another company, Granite Creek Copper, on the copper side. So we're a diversified group of companies focused in the exploration development end of things, all in existing high-grade producing mining districts. So we welcome, people to ask us questions, and we think that we've got assets here that really stand out from others in the sense of these are all systems of true scale, measured in kilometers. These have grades that are economic grades over mineable widths. And so these are assets that have the potential, we believe, to be tier one assets in a major mining company.
Well, I appreciate that, Greg. And getting a little feedback there. So certainly in this environment with all sorts of wild things going on, will be fun to follow what you guys are up to. And that is how folks can get their questions answered. Link to Metallic Minerals in the description field below, so you can click right there. And unlike the CFTC, they'll actually get back to you. So I thank you for that, Greg. Perhaps in wrapping up, I'll mention today's episode was sponsored by the book, The Big Silver Short. The Wall Street banks have left the silver market in place for the short squeeze of a lifetime. And Greg, sometimes your lucky stars are aligned. I actually got this baby published while silver was still $18. So somehow I was able to guess, and all these things about not enough gold, silver, flying saucer, this and that. I definitely got lucky. I mean, there was no question. I got lucky. And much as I did in having you join me on the show here today, I feel quite fortunate and just want to say thank you again for being a part of this.
Well, thanks a lot for having us on. It's really been a lot of fun.
Yeah, and perhaps just as we wrap up, kids at home, when in doubt, if you're watching Goldman Sachs coverage and wondering whether you can trust it, don't take my word for it, but hear what a banker and CIA intelligence official had to say.
And he looked at me and goes, well, no one listens to them. I mean, this was the head of, it was Goldman's research department. The head of trading for Goldman said, we don't listen to our own research department. I said, okay, that explains it. But so I don't necessarily put a lot of weight on that, but
there you go.